Welcome friends, in this video is Xcn coin about to break its silence. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. The pennant pattern we highlighted in previous videos is still relevant. At that time, the price was stuck in a narrow band within this pattern, and we were expecting a breakout following this squeeze, in line with the nature of the technical structure. Indeed, the price eventually made an upward move towards the upper boundary of the pattern. However, this move was more of a test than a clear and decisive breakout. In other words, even though the price seemed to move out of the pennant for the moment, it actually extended the pattern by moving back in immediately afterwards. Such scenarios are quite common in technical analysis and are often misunderstood. This is because the expansion of a pattern can be perceived as a failed breakout in the first place. In reality, however, the price's behavior does not indicate that the pattern has lost its strength, but rather that it is restructuring to become more solidly established. By expanding the pennant, the price creates more data points, which gives us more reliable technical signals. In fact, what is happening here is an accumulation of energy in the market. When the price stays stuck in a certain area for a long time, it shows that the buying and selling pressure is trying to stabilize. The longer this balancing process lasts, the stronger the potential for the next breakout to be. And the best part is that such prolonged consolidations usually end with much more volume and hard moves. This shows us that patient traders can find great opportunities for gains. Pennant patterns usually represent correction patterns following uptrends. This means that after a bullish breakout, the price pauses for a while, gathers strength, and moves again. In this context, a widening of the pennant means that the correction is prolonged, but this is not a negative thing. On the contrary, it indicates that the price is preparing a more solid ground for its next move. At the moment, the price is stuck inside the widened pennant structure. But this squeeze works like a test of patience. If the price stays in a pattern for such a long time, there's a chance that when the breakout moment comes, it could make a pretty big move. And let's not forget that these patterns usually break in the direction of the trend. This means that this pennant structure within the current uptrend has the potential to push the price much higher if it breaks. It's also important to note that the price moves closer to the upper band within the pattern. This is a strong sign that the buy side is more dominant and the price is preparing to break out to the upside. Another principle often emphasized in technical analysis is this: price will usually break out in whichever band it is moving close to. Therefore, the current technical outlook could be a prelude to an upside move. In conclusion, the pennant pattern we mentioned in our previous analysis is still active. The price is preparing for a big move by squeezing further inside this pattern. The fact that it pretends to break the pennant and returns back into the pattern actually gives us the following message. The market is still in the decision phase, and once this squeeze is over, the direction will become very clear and strong. If this structure breaks to the upside, it is quite possible that we will face a voluminous and sharp upward movement. But we need to look not only at the pennant, but also at other metrics. Keep watching. When we examine the chart in detail, we see that the Elliott wave theory clearly works in the short-term time frame. This theory argues that market psychology moves in cycles and that these cycles are characterized by certain wave structures. The current structure of the price is giving quite remarkable signals, especially in terms of the short-term application of this theory. When we look at the price movements, the first and second waves are clearly shaped. The first wave starts with an impulsive upward movement, giving investors bullish hope. The second wave is a correction that tests this hope and causes some profit realization in the market. After this correction, the price regained upward momentum and started a stronger impulsive movement that we can call the third wave. However, there is another critical structure that draws attention here. When we look at the internal structure of the third wave, there is a strong possibility that this wave may not yet be complete. This is because the current movements are taking place within a horizontal consolidation process that could be interpreted as a fourth wave by most technical analysts. The fourth wave is usually the phase where the price is stuck horizontally for a while, searching for a balance between buyers and sellers, and the decision is not clear. This is the phase when investors are holding their positions while accumulating energy for a big move. This phase is also very important psychologically, because most investors remain indecisive about the direction at this stage. A sideways trend makes them ask, is a decline coming? But at the same time, the possibility of an upward explosion of this squeeze is also strongly imprinted in the minds of investors. This is why the fourth wave is often a phase where the most patient investors are rewarded. If this structure is indeed the fourth wave, the next move should be the fifth and final impulsive wave. The fifth wave, although usually not as strong as the third, forms a new high and marks the point at which the market reaches a top. But there is another possible scenario here. If the current price action is not the end of the third wave, that is, if the third wave is not yet complete, then the current sideways movement could actually be an internal correction of this third wave, and the subsequent sudden move could turn into a much stronger rally. It is also worth analyzing this structure not only from a technical perspective, but also from a fundamental and sentiment perspective. Many factors such as the current general mood of the market, macroeconomic factors, sectoral developments, news flow, etc., can affect Elliott structures directly or indirectly. For example, a positive news flow or increased buying appetite across the market could lead to an extension of the third wave and a stronger bullish wave. In short, the current price action stands at a critical threshold in terms of both technical analysis and investor psychology. The direction in which the Elliott wave structure will evolve from this point will give us strong signals about the direction the market will go. If the uptrend continues, it is possible to say that Fibonacci extension targets can work technically. In addition, the current sideways trend can be interpreted as positive in the long run, as such consolidations are often the harbingers of big breakouts. Therefore, it is worth paying attention to the short-term movements ahead, because either new highs will be tested with the start of the fifth wave, or if the third wave is still in progress, we may face an even stronger bullish rally. Since both scenarios point to upside potential, we can say that this structure is technically quite promising. Looking at the chart from a broader perspective, we can notice that the current price level is a very important area compared to previous price movements. This area stands out as an area where in the past, price has been squeezed, moved sideways, and spent a significant period of time here before clarifying its direction. From a technical point of view, such zones often become important support and resistance levels, as the power struggle between buyers and sellers is more pronounced here. When the price comes back to such levels, it naturally starts to replicate past behavior. That is, the price is expected to linger here for a certain period of time and then make a strong move. The fact that the price is so close to the level here shows that it has actually reached a decision stage. Horizontal squeeze is usually considered a kind of waiting phase in technical analysis. The price spends more time accumulating here, waiting for buyers and sellers to clarify their decisions. This process can be considered as a kind of breathing space for the market. This pause following the sideways breakout actually shows that the market is preparing for a bigger and stronger move. Since this level has been reached several times in the past, there is significant resistance here. Therefore, the price may find it difficult to break through this level immediately and may spend some more time here. The stalling period here is actually a phase where market players are trying to test the price and see if this level is solid. There have been similar movements in the past when the price has come here, where the balance between buyers and sellers has been established. Now that it's here again, market players are spending more time testing the true strength of the key level here. This can often be seen as a kind of preparation period that markets go through before big moves. The sideways price action should be seen as a result of the balance of power forming in this area. If the price stays here for a long time, at some point the market will gather enough strength and the squeeze will end in an explosive move. From a technical point of view, the direction of the move at the end of the squeeze is usually bigger and decisive. This can be understood more clearly, especially as trading volume increases. So, if the market is spending time here when it reaches this level, at the end of this accumulation period, it has set the stage for the next big move. Such squeezes can also create great opportunities for investors, because the longer the price stays here, the greater the potential for a breakout. In such areas, investors can act with patience while the price squeezes. In this process, the fact that the price spends time here can actually be considered as a positive signal for investors. It is important for investors to approach such levels carefully and analyze the structure formed here correctly. If the price consolidates here for a while, it may offer opportunities for investors to make strategic decisions. After that, there could be a major breakout as the price crosses this level. The price may leave this squeeze zone behind and start a fast move towards higher levels. In such cases, especially when the volume increases, one can expect a big move in the market. This is because such squeezes can often cause sudden and sharp rises when broken. Any break at this level, which traders are watching carefully, could be an important signal for the market to take a new direction. Therefore, it is critical to watch the movements here carefully and determine whether the price has reached a breakout point. As a result, the fact that the price is currently in this squeeze zone while not immediately negative, could be a great opportunity for investors. The time spent here suggests that the market is gathering strength for a bigger move. When the price breaks out of this zone and starts moving in a new direction, then we will see more clearly how important this squeeze is as a period of preparation. Therefore, it's important to wait patiently at these levels and wait for the right time to see this move to break out. And it's important to be able to hold the coin. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.